Okay, today's session we start now because 40 minutes now we got to be rushed a bit. Okay, so the agenda of today basically I cover for two topics. One is to understand the conceptual framework. Actually, there's no such thing as conceptual framework for the technical analysis, but I try to follow on my own based on my understanding. And today we also cover to address a few commonly asked questions using the concept to explain them. Then the moving on will be the talk about the tools. I group them into three. It's also my own category, which is actually not formally grouped into three. One is trend, margin, and strength. This will be from next week onwards. Okay. So okay, just to share a bit my stock trade journey. I started stock investing in 2016. But actually, the one was value investing. So basically, I buy and I do nothing, and I never sell also for a few years. Okay, of course, currently most of them are stuck here lah. Stuck at after the March thing lah. This is because it's too late to cut loss for that stock. Okay, so I start to use technical analysis in the 2018. And in 2018, I made a total of 47 transactions. I mean, buy and sell combined, 47. Involve value buy sell also about 500,000. 2019 is about the same transaction, 55, also about 500,000 transactions and buy sell. This was excluding the Bar Alpha lah, because Bar Alpha is also, is about 100,000. So 2020 until October, that's about 3 times more than my last year, which is about 140 transaction. But the amount is just not much difference, about 35% higher than the previous. This shows that actually most of the trading was quite small, short terms, just 3,000-5,000 just and earn 300, 500, 1,000 like that. Okay. But anyhow, the profit is actually quite similar to 2019 and 2018. So it's not less or more, it's about the same. Okay. So my current position in this stock market is that 50% is in Malaysia lah. Then in Singapore, mostly are all real estate investment trust. Hong Kong is mostly those giant companies like Alibaba, Tencent, and IGG. But some of them is sold already. US always minimal. I only keep 2 stocks, which is the gold miner stock. Actually, is booked as insurance. When the market is down, the stock will go up lah. And they're doing pretty well in this year. They're doing very well. About 30% return. But if you divide by 3 years, it's about 1 year, about 10% only lah. But now suddenly it shoot up in this year. PLC, Hong Kong, Singapore, and Malaysia is about equal, 30%, something like that. But just that earlier of the year, I sold a lot of OC stock. Because OC stock, I have a lot of this hostel, especially Singapore, the hospitality stock. So when COVID spread out from China, I sold a lot of those hotel stock and moving my fund to glove and healthcare. Technical analysis error I made in 2020 actually is less than 10 over 141 transactions. That means that subjected to time frame less than 1 week. That means that those that are using the technical analysis to forecast is supposed to go up. It happened in less than 1 week. Or it's supposed to be go down. It also happens. So it's quite accurate actually. So in 2018, 2019 is easier because most of the stock uptrend. So even you try any method, any technical analysis method, it will mostly go up. The last challenge actually in 2020. But anyhow, I find that it also works for me. It also works for me. So it's quite accurate. So the framework, basically most trader investors fall into one of the 3 camps when it comes to using the technical analysis. One is those who believe it works 100% one. The next one is they don't that's going to happen. It's not going to work. Then these two basically both of them are arguing that science tells us that technical analysis, one is say it works, one is say it doesn't work at all. And the third one is more interesting, is that it insists there's a self-fulfilling prophecy. The other word is gambler fallacy or apophenia. The example is like apophenia, like you see in the classic drama, when the flower or the vase fall down suddenly, then something bad happened to the main character. Because people tend to see the pattern associated to what will happen. People try to simplify the complicated issue to make it simple. Okay, so I'll explain more on this. The third concept is that people believe as such, so they act as such when the signal was so. So the expected outcome produced because of their action. For example, is that investors, they believe in MACD. I think most of you heard of MACD. So they bought when MACD saw a buy sign. So of course this will, as a lot of people doing that, then the share price will be pushed up. And from the buying action, this is called the self-fulfilling prophecies. Actions be the action. So go back to the first concept where they use 100% technical analysis one. Is a company fundamental performance tends to attract the interest of the investor. Okay, so of course they come with the buying and selling activities, and any of this selling activity will be captured and the reflect in the technical analysis tool, like in all the chart and the graph. According to this group of people, before this, it will be some time lapse before the price reflected in the share. So they will take this time lapse hints or window as opportunity for them to invest. So for them, it's like a telltale sign, just like when people see the dark cloud, thunder, it's a sign of coming raining soon already. So you got all sapu, all the umbrella in the world, wherever, it's going to rain soon. So for them, it's just a sign. Okay, this is the first concept. So to apply this concept, technical analysis widely used, and it works better in forex compared to stock, because compared to the stock markets, in forex the central bank will try to control it. They need to keep the currency in check, so that's what make it more predictable. So you use a technical analysis in the forex is more accurate compared in the stock market. So if you use in the stock market, which not just only from the company performance itself, but also so many factors from outside, geographical, political issue, and also this any news, negative or positive news. So it's a weakness. If you apply this alone in the stock market, you will overlook the company's fundamental, the strength, weakness, and opportunity trade. And you need to make a lot of this trade, high frequency of trade. With each trade only small amount of ringgit value. The percentage may be more, 100%, but you may earn 100, 200 like that, the small quantity. Because in the short term of a period of time, it could be destructive unless you are doing the full time, because you have to check on that quite frequently. Then for this second concept, who are solely fundamental one, okay, is that company fundamental performance, the intermediate noise, what happened, these people wouldn't bother about that. Normally they'll buy and keep for 5 years or 10 years. They sometimes be confused is buying this type of stock, like confused with the property appreciation. For them, like buying the Nestle 20 years go around will go down to 200 or 300 ringgit per share. This is for them. Or sometimes I think most of them could be lucky. So for this type of people, after a strong fundamental company stock identify like Nestle, then you calculate intrinsic value, or they say it should be 150, now it's only 140. So it's a good buy, so they enter it. Then they keep it for a long period. So what happened, like now COVID dropped to 139, they don't bother about it. Now, some of the fundamental approach is that, of course, you read the company's financial statement, their SWOT analysis, then you calculate the intrinsic value, which also involve a lot of calculation and formula. And the most basic, simple one is you compare the 5 years price PE ratio, price and earning per share, the price of the share and earning per share ratio. The most easier one method to do is, right now you can see here, this is for example Pharmaniaga. You can see the 5 years, the PE ratio here. Then at least you can compare. For the last 5 years was 19.33. So now it's 18. So consider it's not expensive for this price at this currently. This is yesterday. So it's not expensive at that. But of course you have to see why like that, because in the 2016, 2017 there's a sudden going up. So you may want to invest it why. But generally this is all not much differences. Then you can use 5 years to gauge whether current price is expensive or not. Okay. So using this intrinsic value and the PE ratio is to determine whether one price is expensive or cheap. So we cannot say that the stock 10 ringgit is more expensive than the other stock which is 1 ringgit. It will be unfair. It's not the right method to compare. You have to base on their own PE ratio from their, you cannot say PE ratio 10 is also more expensive than 5. You have to compare into their own industry. The weaknesses of using this alone in the stock market is you may overlook the right timing. You may get the right price, but you may enter too early. And most of the time will get stuck. Like currently, you'll find that public bank is very cheap. Of course, it's cheap. It's value compared to now previously. So you enter it, it may take 5 years or 10 years to go up. Okay, and you also may overlook the right timing to exit. Then you should earn more than you earn less now. Okay. So the third concept is more interesting. Is want to spend more time is that buying and selling activity of stock, of course, it will reflected in the graph. And investors who use the technical analysis will base on the signal and make action I mentioned just now. And there will be more and more investors using technical to take action after they see some confirmed sign and then reflected on the share price. This is the third conception. So if one take this concept framework of the self-fulfilling prophecy, then three questions you need to ask. One is that two questions. One is investor from which stock market? Because it depends on country. If the country, let's say India, they don't use technical analysis, then basically analysis doesn't work because nobody is using it. If let's say in this Hong Kong, most of them using the Bollinger Band and they don't use MACD, then of course Bollinger Band will work better. So it depends on the market and what they use the most. Then only you learn about the buy side. But most of the people, they didn't go and focus, they don't bother about the market and the tool, but they go and study all the buy side, learn all the sophisticated tools, which only they or few will use only. So it's unlikely will be more effective compared to majority user. So to apply this concept, you only use popular technical analysis tool will do. Widely used by many. Don't need to use all. Okay. Of course, there's a weaknesses. You may overlook company SWOT also if you don't look into their fundamental analysis. You also have high frequency trade and the small return. It will be less distractive because you only use a few tools, but it's still distractive from short to mid-term noises. So what I suggest is that as a part-time stock market investor like us, is adopt two conceptual framework together. After you get a strong fundamental company, for example, say you find that Top Cloth is quite strong company in terms of fundamental analysis, then you use a technical analysis to see when to go in or wait or to sell if you have the stock. So you apply two concepts over the time frame. So in short, it's basically using fundamental analysis and the technique to know what stock to buy and technical analysis to know what price or when to sell or buy. Okay. So, but those who use this technical analysis must aware there are some problem and bias. There's two problems basically. One is the data mining process because we have over 100 tools, and in each tool we may have different settings like MACD. You may have 12, 9, or 26 days. Some got different day. So there's a lot of this data mining issue. Second is the subjective interpretation. I mean that how people interpret a graph is different from other people's. Some people they see the head and shoulder, some they don't see they consider head and shoulder. Okay, but our study we won't go into such a detailed graph. Okay, now we move on to the addressing commonly asked question. Now the title is addressing commonly asked question, but basically is to bring out those questions commonly asked by most people to understand how the technical analysis works. Okay. So I will travel to what extent we need to do the company analysis. We have mentioned about we're going to adapt to. Then people will say, wow, then you have to do a lot. It's not. Okay. Second is this the time to buy those blue chip stock? This is controversial. Yi Xiang may not agree with me, but now we go through this. And third one is what you should do. Now I bought the stock. So what next? Fourth is that today only I received few questions about this from other friends. Why the share price, the growth, all this stock dropping without negative news? And some of course still asking, are you a value investor or trader? And this stock still can buy both. This one I always heard also. And the last one that add in may not be only in the stock market, but I think I need to bring you to your attention to share my experience. So first is to what extent we need to do a company analysis. Okay. Now I would like to borrow the Robert Kiyosaki, the cash flow quadrant here. They know they have this employees, employee, business owner, investor. Now, some of the investor guru will ask you to tell you that see yourself as a business owner running a business when you buy a counter. But how could you do that if you have 20 counter? You cannot run 20 a company, right? Warren Buffett advised to take no more than 20 counter, but 20 counters is a lot. Okay, all right. So if you look into this organization, you know the employee, they do the most thing, they do the more hand job compared to this self-employed, sorry, wrong typo, business owner. But how about investor? So I would say investors should actually look into our financial freedom plan. You should actually have your financial freedom plan side by side with your investment plan. And we look into local and global trends to the wide but not too details. Here I have this IE3 James and investing. So for example, IE3, most of them you may know. I just show you the new share. Okay. They have a lot of coffee talk also, but some are very good articles. Then the other ones I like is the James investing. So these people have done a lot of analysis in terms of fundamental analysis. So you don't need to go into do detail like this super buy sell many times already. Every time I earn 1,000 like that, I just buy sell. So it's very good details analysis by video. Actually, you can see all in video. It mention everything details. So they have done a lot of this fundamental. Is no need for this to go into too detail. I tell you why later on. Okay. So workload should be low. Most time by either, except I will study to gather more information. So we don't need necessarily to study all in detail. So to what extent we need to do analysis in terms of fundamental, your objective to find what stock to buy. So study analysis for those already available one. Those stocks that keep on appear in those Facebook and those in the IE3 one. Okay. And of course, some experts go for this gem stock lah. But I would advise we as part-time not to do that because you really need a lot of expertise to do that. So look for the popular stock will do. If you want to join the Facebook, all this stock market, they keep on all this popular stock to mention. Because the less popular the stock, the less price support by big player. I mean, there are less people chow. So the less volume, liquidity, and take longer time to return opportunity to gain. Because there's so many stocks. And regardless how detailed you study, also some of the company have the way to hide the information also. And even though the company is really good, it may not affect on the share price. So the last one is I have in my other presentation about how to build a watch list. You want that in mind? So a quick look to a company is using the KLSE screener app. Just go to like Bintai. Bintai is popular for related with the white sin. Supposed to bring white sin, koi white sin to Malaysia. So just a quick through, go to their quarter and annual. You can see that all the red color one, all this proceeding year red color one or earning red color one, then you should run away lah. So not go for that. You go for it, basically you speculate he will do better. He may do better, but it's a lot of speculative element there. Technical wise, the objective is to establish what price to buy and to enter or dispose. So use the commonly technical analysis tool will do. This all slide I will send to you all, don't worry. So use only those most people use. Okay, you know why it's the reason already. The framework, the conceptual framework is that the more people use, the more effective it is because of the self-fulfilling prophecy concept there. So it's best to use the table Excel format to ensure you won't miss out the vital technical. But for example, you tend to use 10 tools, but you may get used to, I use only first three, and then you forget about the last already. So it's best that you have this habit to have all these line in the Excel. For example, this one, Do Pharma and Pharma Naga. First, you do a fundamental analysis. Then you write there all comparison. Then after that, you go into technical analysis. Then you go for technical analysis, continue and preference. So at least you won't miss out those important the tools that you're supposed to do. Remember that, you check everything already, but you forget to see the X date is tomorrow or what. After you buy it tomorrow, X date, then it drop again. So second question is this the time to buy those blue chip? Now, during this is more prevalent during the March, April time. Now people see clearer picture already. So you can see that those big companies affected by COVID-19 one, like Casper lah, like this Asia lah, all these restaurant possibly Padini as well, those retail shop. Because we can see that before the QR come out in March or April or in June, their, you know about P ratio is share price by earning per share. So their earning per share was before the COVID-19 result. But the price, of course, is today's price. So in May, their price had dropped because people are running already. But you look into their P ratio, it's very cheap because their earning per share were using the before the COVID-19 one. So when the yearly QR come out already, then you realize, yeah, actually you buy all those AAC, everything is expensive already. Where the healthcare and glove store actually is cheaper. Now when this happen, when top drop come to 100 times PE ratio, people say it's very expensive. But previous was 50 times, but now 100 times is very expensive. But people already know that the sales earning per share will 3 times, 5 times more. So actually, eventually, at 5 times more, it's cheaper already. So of course, must understand after 3 years, things will change again. After 3 years, when COVID no more, those AAC may go up, so it become cheap already. Then the glove and tech will become expensive. So two points I want to highlight here is, first, make sure that earning is current when you do a PE calculation. Now at least safer. Now at least you can see the earning per share is this affected by COVID one. Now people tend to understand when I ask them not to buy Casper. They keep selling us because I say better don't buy. Okay. Second is you can only invest short and mid-term. I mean less than 3 years. You can't really buy 5 years because you can't see what happened post-COVID. People told me that they buy Top Glove, Gosan for long term, 10 years like that. They're not aware actually after 3 years it might be different already. Okay. Okay. All right. The risk of capital being stuck is high for blue chip stock. Because this is foreign public bank, their choice now you can either invest now or later. Invest now, it depends on the growth and the time span. It may end up 100% return in 5 years compared to 20% in 1 year, which actually is the same. So I wouldn't say this is wrong or right to invest now, but I think the risk is higher for capital being stuck if you invest now, unless you have a huge capital. I think I got 10 minutes already. So what do I need after buying a stock is that I would advise using the apps to set this cut loss and profit taking. Go to app there, set a target 5 to 10% below entry price or 10 to 20% above the entry price. Okay, you can do it there. And of course, we don't know what will the possible resistance. It depends on the stock, the market sentiment. But you may have to cut loss 5%. You realize actually you buy the wrong thing. You really mistake, you know. Or secondly, is something event that before you do study, it never happened, but something really happened. When you want to buy the time before COVID, and the COVID come like, hey, so better cut loss because you know that it takes a long term to recover. But two things I need to highlight is that always profit taking. If these two things happen, with the price hit the second highest price target price by the investment bank, or where the price gap up for 1 day or 2 days. For example, like this. Pharmaniaga, when this is price up, you better sell already. Okay. Second is the target price by the IB investment brand. For the Top Glove, the highest 13. Then second 13.30, another one is 10.68. But you have to see the highest one, whether it's outlier. I mean, somebody go and put first one is 30 ringgit and above. Now, of course, we don't use that at the first one. We just omit it. Then if whether the first and second, whether there's a lot much difference. If a lot different, then we don't use the 12.30 as second. We use the 10.68 as second. So for me, 10.68, I will sell my Tough Glove. We haven't reached that. Too bad for that. The third one is if you know that every month you want 5,000 profit only. So whole year you want 60,000. So by the end of the year, you already hit it. You want to sell to hit 60,000, then you just sell and leave it. I do that. So I hit my profit target in the month of October. So I just sell. Now, in fact, I don't want to do anymore until Chinese New Year already. Also can. Because I already achieved my profit target. Okay. So question 4 is, people ask me why the share price dropping like Supermax, doing so bad, why the price dropping? No, they didn't know. So again, self-fulfilling prophecy, I explain this one. Because it is the performance reflected, the price reflected in the technical analysis, it shows in the signal, it provides a signal to the investor, and they start to do profit taking. So more people are following. Of course, you see the price drop. After a while, you can see the reverse is true again. People loading and in the discount. So it's logical. So people tend to ask me this question also. I would think this is a stupid question. But is that most of the investment guru, they tend to simplify, say it's very simple investing. Just buy Nestle and sleep, don't do, and then we good in 10 to 20 years. I think this is very dangerous. You may get your capital stuck, especially if the market crash. So stop categorize yourself is whether long-term value investor or short-term technical trader. Many newbie, they say, don't worry, I'm a value investor. So price stock, I don't worry, don't need to do anything. So get themselves stuck. So I ask all to be investor who seek margin of safety, a probability for more consistent return target for this, like what Warren Buffett mentioned, the three most important word investing is margin of safety. Probability, I mean like you don't drive a truck that weighs 9,000 pounds across the limit at 10,000 pounds. Okay. So knowing how much return to achieve to maintain your financial independence just now is the best, is a bonus, because you're not looking for the profit, but looking at the lifestyle you're looking at. So this stocks you can buy. This is the most important slide. I think I still got 5 minutes. This is the most important slide. So asking this question, first you have to use a fundamental analysis using their previous QR report, the basic one, the profit PE ratio analysis by from other people. Then and also as well as technical analysis to see what is the probability of the share price at this moment to increase or reduce. Based on first one, using MACD, ISI, Stochastics, the trend, to see the chances for the price to go up, is it lower than going down for us to buy. And also using Bollinger Band, Fibonacci, EMA, to see the margin. I mean, if we profit, profit 10 ringgit. If it drops, only 2 ringgit. This type of margin for us to buy. And the last moment, before you click the button, always look into the strength. How strong is the signal, the candlestick and the volume. And you hold or click the button. Okay. So this, I hope you all don't ask stupid question again. I will see this stupid question because people keep asking me some question. Okay. So the final slide, not the final, second final. This is also a most expensive slide. Some people ask this stuff can invest or not. Not just a stock market, but also in many other things. People may come to you about land investment, property investment, business investment, ask you to put your money into investment. Now, there are two things you need to know, the four things, but the first two is more important. The first is the transparency. Whether their profit and loss is transparent, you know that they are not cheating you. Like, hey, it's a loss, you know it's loss, they are not cheating you. But you invest in your friend's business, you don't know one, they say loss, no declare dividend, you also do not know. Exit strategy, you realize your mistake or you want to profit out, can you exit or not? Like stock market, you buy the Asia loss, but you can exit. You make a decision, it's okay. Then this one or two will save you from many future investment scams. Please look into these two. Only like you look at return on investment in ringgit Malaysia, not just in percentage. If I give you 100% return, by 1 year, you only earn 10 ringgit, also useless. Okay? Then the duration, how long? 20 years. I don't know how long we can live 20 years from now, so not sure. So too long, also useless. Okay? End of the session learning, I want you to take back the learning value is that using the logic of self-fulfilling prophecy of technical analysis, that causing the supply demand of stock and just their share price. So whether the technical analysis work or not, very much depend on which market, who are they using technical analysis, and what analysis tool they use. In Hong Kong and Malaysia is different, which I can share with you my experience. Then we can use both fundamental analysis and technical analysis instead of categorizing ourselves in only value or trading. Okay, because having both will increase our probability to profit. The key word is margin of safety. And a fundamental analysis will assist us in picking the stock, while technical analysis going to trend, margin, and trend will assist us in timing the transaction. So only brief fundamental analysis and common tools used will do. Okay. So the coming session I will touch on very much will be by trends, margin, and strength. But this is very easy. Once you understand today's concept, then it will be very easy for us. If we are cut off the time, then we can start again a new session for the Q&A. So is there any question? Today this is the last slide.
Okay.
This one basically I want to tell you is step by step. When you want to look for stock, step by step is that, of course, when you join a lot of Facebook, I can later share you watch Facebook. Then you know people keep talking about the stock one. When people talk about Bintai, people talk about Famanaga, people talk about VS, Here talk about this data sonic, Johor-Tin. You know this type of people, they see very, very good, and then you look into that, it's good. Then you use technical analysis. So basically, the concept is few words. First is margin of safety. Second is probability. This is statistic. I mean that we do not know what happened next one. We make decision based on the probability only. I mean we do not we believe that tomorrow we still alive. That's why today we study, right? Because we believe tomorrow we are still alive. Because the chances for us to alive tomorrow is 99.9%. We have been alive, go through so many nights. So we can only make decisions based on probability only. So to make this probability, is only three things important. Is in the tools that I categorize in three. Is trend, margin, and strength. Trend is that the price at this moment, at next second or next minute or next tomorrow, it should go out more or go down more. Using the MACD ISI, I start to do that. Then the margin, I mean that even though it go down, I know that I just lost 2 ringgit, but it go out, I earn 10 ringgit. So let's say you trade 10 times, so let's say the chances the probability you win is more. So probably you just lost 5 times, then half. 5 times you lost only 2 ringgit, $10. 5 times you earn $10, you earn $50. Understand? Understand, Mr. So you earn 50 ringgit and lost 10 ringgit using this probability. So it's size. It's not, you can say a bit of gambling, but it's a lot of things is the size side. You go to casino also, if you look into this, Adam Khoo explained to you why casino always win money. Because due to the probability also, they have 2 green color that you don't have one. So they have more chances, I think 52 or 48 chances to win you. You only got 48%. So of course, you only 1, 2, 3 times cannot count. You have to go through the normal distribution, data of normal distribution we learn in statistics, which I learned in master. Normally it's 600 times. So to do that, just now, let's say 50-50, you need to transact 600 times. Then only you get about this 50-50, or 58, 52, or 42. So this is very important concept. Once you get this one, then it's very easy. Because MACD, you know how to see MACD is for next section. RSI stock, that one is very easy. So in next week onward, we don't have much theory already. Just tell you how to identify the thing and mean what, then you know, this is for trend, this is for margin, this is whether to buy now or next 2 hours, then you will know. Okay? So make sure this slide, understand this slide.